This is your LMAX Exchange technical update for Thursday, January 26, 2017. Eurodollar. So the euro continues to extend its impressive run in 2017, and the clear focus right now is on a retest of that December peak at 108.75. If the market can establish above that level, then we could be seeing a more significant shift in the structure. If, however, the market is unable to establish a close above 108.75, then the pressure remains on the downside, and there is risk for a lower top and fresh downside extension back towards and a retest of that recent 14-year low at the 103.41 level. Sterling dollar. So cable is now moving closer towards its key resistance, that 27.75 December peak. A break above that level could suggest a major double bottom, projecting gains back above 130, but at this stage it would be premature to call for such a bullish move, and right now the focus is just on a test of that 27.75 level. If the market can break above it, then the conversation can shift, but inabilities to establish above 27.75 will keep the pressure on the downside. So right now risk looks like we could see a push towards 27.75, and then the market could once again stall out in favor of the broader downtrend. Dollar yen continues to extend its correction since that 118.67 high that we saw, that multi-week high we saw several days back. There is risk following this consolidation for another drop into the 110 to 111 area, although the market should eventually see a fresh higher low and bullish resumption through 118.67 and towards 120 further up. Euro Swiss has been consolidating over the past several days. The ranges have been nothing to look at really, with the market not wanting to go anywhere, but overall the pressure does remain on the downside, and this market seems poised for an eventual test of that 2016 low at 106.24. Aussie dollar. So Aussie has rallied all the way up above 76 now. The market stalled out this week just above 76, but there is risk potentially for this gains to continue, for the market to extend up into the 77s. Overall, though, on a medium-term basis, there's a lot of good resistance up around the 77 area, and so I would expect the market to stall out there in favor of a resumption of declines back towards medium-term support lower down in the 71.45 area. Dollar CAD. So dollar CAD has pulled back in recent trade, but the market continues to hold above psychological barriers at 130. At this point, a close below 130 would negate a more constructive outlook and potentially force a shift in the structure. But while the market holds above 130 on a close basis, there is risk for another rebound and move back towards the recent multi-day highs at 136. Kiwi dollar. So despite this impressive surge in Kiwi in 2017, the market continues to look like it's topping out off that 2016 peak at 74.86, and so a lower top is anticipated at some point between here and that high that we saw back in November around 74, in favor of that next downside extension back towards medium-term support at 66.76. SPX 500. The S&P 500 continues to push up to fresh record highs. The market is now trading in the 2300 area, and there's room now for this to extend up towards the 2320 area next. At this point, it would take a break all the way back below 2232 to force a shift in the structure. Gold. So gold is pulled back into some key support now below 1200. Any setbacks that we do see over the coming session should ultimately be supported in the 1160 to 1170 area in favor of a higher low and fresh push beyond the recent highs and towards 1375 further up.